and welcome to this Moneycontrol live stream. I'm Nandita Khemka and you're watching Morning Trade. Well, over the next 30 minutes, we'll be talking about the setup for trade, the stocks in news, and of course, we'll also be talking about the sentiment in the IPO markets. And if you have any stock-related queries, send them in to us on our live feed and we'll have them addressed by our expert on the show. But before we do all that, let's take a look at the top headlines at this hour. Well, it was a broad-based rally on Wall Street overnight. Indices remain on track for the best week since January as fears over the banking crisis recede. Weekly jobless claims rise, indicating a cool down in the labour market and give way to optimism that the Fed may soon end its rate hike cycle. European markets end higher, continuing their momentum as banking sector concerns ease. The German DAX surges even as inflation comes in above estimates. Asian markets, meanwhile, trade higher amid strong global cues. SGX Nifty is also trading at over a 150-point premium to Wednesday's close price. That indicates a gap-up start for the Indian market. Donald Trump indicted by a Manhattan grand jury in the Stormy Daniels hush money case. Now, Trump becomes the first former U.S. president to face criminal charges even as he makes another run for the White House. SEBI makes it incumbent on listed companies to clarify on market rumors. Top 100 companies must verify, deny, confirm or clarify on rumors from October this year. The regulator also amends the rules to make the board of asset management companies explicitly responsible for protecting investors. Well, without any delay, let's go across to our technical expert on the show today, Raja Venkatraman of Neotrader, joining us this morning. Raja, we managed to reclaim that 17,000 mark on expiry day. How are you expecting the April series to pan out, given the fact that SGX Nifty is hinting at quite a strong start for the Indian market?
Yeah, so after a very, very long time, we are seeing some positive vibes emerging here. But then, like I always feel and I've always shared, the excitement is what, the professional players are waiting for. So one needs to tread carefully into these waters. Yes, we have managed to close above 17,000. Yes, we have managed to hold the October lows. And yes, Bank Nifty has also started looking up, and the big bank collapse, which we saw from the global cues, are definitely seeming to be a history at the moment. But what we have to consider is that the kind of decline which we have seen over the last more than 3 months, it's going to persist and it's not going to go away soon. So if you're going to engage on the long side, you have to be again quick on your feet, because I envisage an overhang above around 17,400. So now if there is a move above 17,400, if there is a closing above 17,400, I will change my opinion. Otherwise, I continue to maintain that whatever rally you're going to get, you are going to witness a short side. So yes, stay on the long side, but you have to be careful that 17,400 is an immediate resistance. And when you talk about Bank Nifty, I feel that the overhang could be in the region of around 40,500 to 800. So that could be an supply zone for Bank Nifty. So yes, I am positive, but for a very short period. And also one needs to consider that today is the last trading day of the week, right? So we will not see too much of long positions being carried forward. So yes, people will try to bite into the news flow that yes, the rate cycles are not going to be as regular as it has been, the rate hikes, which I mean, and people will slowly and steadily slip into the bullish mode once again, because the bearish scenario has been on for a long time. So maybe it's a time for the bearish scenario to end and the bullish scenario to begin. But then we have to tread into this phase very, very carefully.
Right, Raja, it's also the last trading day of the financial year. I'll come back to you and we'll discuss specific stocks. But let's also bring on board Bhavesh A Shah of Equirus Group to talk about the trends that are shaping up in the IPO market. Good morning, Bhavesh. Good to have you on the show. Well, if you look at a recent report, it says that as many as 37 Indian companies in the IPO market have raised 52,000 crore rupees through main board IPOs in FY23. Now, this amount is, in fact, even less than half of what was raised last year, over 1 lakh crores, and that was an all-time high, right? Given the fact that there is a bit of slowdown in the IPO market, how do you expect the next fiscal to pan out now?
Good morning and thank you for having me on the show. I completely, if you look at the data, I think there's been a significant amount of downward trend in terms of raising money from the IPO. And I think if you were to really look at what is the underlying scenario behind that, it's basically what's happening is the volatility in the market, and institutions have been focused more on their own portfolio companies and trying to average out their stock purchases in the market when the prices have been correcting. So their tendency to focus on newer companies has been extremely kind of inelastic to that extent that, they are investing in companies only which are extremely very, very differentiated and are having significant moats and are able to demonstrate a track record of profitability and growth. So we have over 100 IPOs waiting in the wings to happen, but only the select ones are happening. I personally feel that this trend will continue to kind of, shape the IPO markets in the future year as well. I feel that companies only which are very differentiated, companies which have a differentiated business model, a good moat, and are able to crack numbers will be able to, raise money from the market.
Right. Bhavesh, recently we've seen IPO filings like Idea Forge, which also, by the way, has a Bollywood connection, and Cello also has started the process to file papers. Given the fact that Dronacharya saw a stellar listing even in a volatile and weakish market, how do you see sentiment panning out around these smaller IPOs now?
No, I personally feel that, irrespective of the size of the market, size of the IPO, in fact, I personally feel that it's an individual call on very differentiated companies that is going to really matter for these investors. We at Equirus have been very busy with some of the IPOs. We've been able to get some IPOs done even in these markets. But the key, underlying themes that we were able to see is we were able to get the attention of the fund managers to invest in the IPO and kind of create that kind of a good amount of pricing for the IPOs for them to be attracted enough to kind of invest in this companies. Mind you, mutual fund industry is today flush with a lot of cash. There is every month there is 22,000 crores worth of capital coming in, out of which 14,000 crores is almost a SIP amount. But despite that, I think the tendency for the mutual fund industry, which is in fact driving the IPO market today, more than the FIs. FIs, they sometimes, they had come in August and, they were there till November, December last year. But then again, they've been kind of, going away. So mutual fund industry has been driving the sector, and wherever we are able to get, whichever company is able to get their attention, those IPOs will get done. So some of the examples that you mentioned, these are remarkable companies, but I think it's important at that particular point of time how they're doing and how they're able to create a differentiation for themselves vis-a-vis others to get an IPO done.
Right. Let's also talk about the startup valuations that have taken a hit. We've seen what happened with the likes of Paytm, Nykaa, and most of them were hammered out of shape and were quite well below the issue price. There has been a funding winter. There are layoffs across the startup universe. So, anyway, they are grappling with issues now. Even SEBI has tightened its regulations when it comes to IPOs, in the wake of the debacle that we've seen around these new age tech companies, with a lot of IPO documents being returned. And recently there was news that OYO is also looking to, trim its valuation by 2/3. In light of all this, there are other startup companies like MobiKwik and the likes who are waiting in the wings for an IPO. Do you think the wait will only get longer now?
So the capital market, in my personal view, is an ultimate test of the company's ability to raise funds. We have seen a flurry of activity in the private market when it comes to e-commerce companies or the new age companies. They were able to raise equity to kind of, burn for growth. Ultimately, the IPO markets or the listed stock markets, the investors are concerned with the profit on a quarter-on-quarter basis. So while yes, we did see listings of Paytm and Zomato in the enthusiasm of the new age companies, trying to raise money from the capital markets, but ultimately that was a more of a short-term phenomenon. These companies will have to demonstrate a business model that generates money, that generates profitability, and only those companies will be able to raise money. A lot of companies may want to raise capital markets still with the revised valuations, with downsized issues. But my personal view is unless and until there is a clear visibility of profitability, most of these IPOs will not see the light of the day.
Oops, most of the IPOs will not see the light of day. That's the call from Bhavesh. But Bhavesh, lastly, I want to ask you about the big one. When can we expect the NSE IPO now, given the volatility in the market?
So NSE, I think, has been one of the most awaited IPOs in the capital markets for quite some time now. Obviously, they're going through there's a judicial process which is going on over there. And I think, while we see things may be settling down, but it's still some time away. So my personal view is still the issue is not settled fully, which may take anywhere between 6 months to maybe even 12 months. Till that time, I think the market will have to wait for the IPO to come.
Well, yeah, the market will be waiting with bated breath for this most awaited IPO. With that, thanks a lot for taking out time this morning, Bhavesh, and joining in and putting things into perspective for us.
Thank you so much. Thank you so much.
Thanks a lot. Well, let's get back to Raja then and discuss specific stocks. Raja, stock I want to discuss with you is Nestle. Now, reports suggest that it is eyeing Ching's Secret, which is owner Capital Foods, in $1 billion deal if it fructifies. Now, these are just reports, of course, and several other suitors are also in the fray for Capital Foods. Nestle, if you look at it, over the last 12 months has gained somewhere around 10% or so. Has outperformed the market, if you would say that, in the last 1 year. How would you advise investors to play this stock now?
Yeah, so yes, Nestle is in a sector which is definitely attempting a recovery, and yes, it's a defensive play out here. So those who are looking to participate in Nestle should consider that yes, the upward momentum is definitely on the cards, but then it's going to be a slow one. So unless we are able to get a move above around 19,500, I would not be a buyer in Nestle, but then it will definitely be on my tracking list.
Right, so Nestle is on Raja's tracking list. Let's also talk about the top brokerage call of the day. Jefferies has initiated a buy call on SBI Card with a target price of 900 rupees a share. It believes that profit will grow at 23% compounded annual growth rate over FY23 to FY26E. SBI Cards, Raja, you think it has been, outperforming banks when it comes to its credit card business as well? Would you advise investors to look at an SBI card now vis-a-vis, say, some of these private banking names?
Yeah, see, the way SBI cards are performing, it will definitely need some boosters, and that is what it is getting at the moment. But when you take a look at the overall price movement, you definitely are not very enthused by the overall picture. So I would not be a buyer into SBI cards at the moment, because I feel that it is still needs more tailwinds for it to revive from here. So I would wait and watch SBI cards.
Right, wait and watch on SBI cards. Let's also talk about some other stocks in focus this morning. JSW Steel, it has emerged as a preferred bidder in auctions for coal mines in Jharkhand and Chhattisgarh. If you look at the stock, it was up somewhere around 2.5% on Wednesday. Time to look at it from an investment perspective over the next 2 to 3 months?
Yeah, you're right that after attempting to move above its recent highs, the price did witness a correction. And then what we are seeing right now is that it has found a good floor out here. So, one can look to invest into JSW Steel for the next 2-3 months with a stop below 650 for an upward trajectory around 775 to 825.
Right, that's the call on JSW Steel. Let's also bring in some queries that we are getting this morning. The first one is coming in from Trilok, and he has a query on the IT sector. He wants to know your thoughts on TCS and Infosys for the short and long term. Now, over the last week, in fact, we've had only 3 trading sessions this week, but over the last 5 trading sessions or so, these two stocks have managed to give positive returns to the tune of 1% or so. What would you advise him to do for a long term now, given the fact that we did see some underperformance kick in once again in the IT pack? But do you expect these companies to now stage a turnaround once again?
The overall structure of IT continues to remain weak. We have discussed this in our previous sessions as well. And the scenario only continues to build on the negative side. So now the thing with IT is that everyone has been looking at IT as a defensive play and expecting it to repeat its 2021 magic. But the thing is that the stocks are currently pressured, and the kind of scenarios which is happening in IT across the world, IT is not going to wake up soon. So IT as a sector should be left alone at the moment. And between TCS and Infosys seems to be much more weaker. So it would not be a good time to look into the IT space from an investment perspective. But then if you want to look at it from a trading perspective, you can definitely look at any rally into these names could be a short opportunity.
While rally could be a short opportunity, that's the call. Let's also take up a query on Grasim. This stock is in focus given the fact that it will be making its entry in the paint segment and giving the likes of Asian Paints and, Indigo Paints a run for their money. If you look at the stock, it has done pretty well over the last 1 month or so. What would you advise investors to do now? Should they look at it now, given the fact that the paints entry could also bode well for the company?
Yeah, you're right. When you take a look at the cement sector, like I said, you should shift your focus to some other sector. So the other sector which I would like to focus on is the cement sector, considering the kind of infra push which the government is also giving. So the entire cement industry is witnessing a steady movement, and you can see here that cement sector has become very active of late, and Grasim definitely is looking to stage some more upside from here. So it's come to a good sweet spot here. So you could look to have a stop loss below 1600 and look for an upward trajectory towards 1700 to 1750 in the next few weeks.
Right, so those are the levels to watch out for on Grasim. Since I was talking about paints, and we have another query on Indigo Paints from Abhilash S, and he wants to know that there has been a drop in crude prices recently, even though they've started inching up once again. What's the call on Indigo Paints? What strategy should one adopt on this counter?
Yeah, Indigo Paints unfortunately had a very good listing, but since then the case has been completely downhill, and I don't think that scenario is going to change, and the overall momentum continues to be on the weak side. So if you are a holder, then it's probably past your entry price. But then if you want to freshly invest into this, it's an avoid.
Right, avoid Indigo Paints at the current juncture. Let's talk about IEX. Quite a few query coming in on this counter as well. If you look at the stock, it is very close to its 52-week lows now, around that 130 level. Is it an avoid now, given the fact that we are witnessing quite a few volatile moves on crude as well?
Yeah, so this particular stock is actually a favorite on the short side, and the kind of signals which we are getting now is clearly indicating that you could experience some decline here. Yes, you could short it at current levels, use rally towards the region of around say 140 to 145 as a supply zone, because this stock is going to face some more declines. So I would not be a buyer in this stock.
Right. A shorting candidate, that's what this stock is. Let's also get in a query on Usha Martin. This one is coming in from Vikram Mathur, and he wants to know whether this is a good swing play. If you look at the stock, over the last 1 month, it has gained somewhere around 20% or thereabouts. What would you advise him to do?
Yeah, so this is a fairly decent stock selection. This stock is set for more gains. You could look to initiate at current levels. You could use dip towards the region of around 175 to participate. And you can use a stop loss below 150, and you could actually play it for a couple of weeks here, because I envisage a target of around 400 by the end of this year.
Right. Let's also talk about the pharma basket. US FDA has issued Form 83 with 10 observations for Lupin's Pithampur plant. Do you expect this counter to head lower in today's session given the news flow around it? And should one look at buying on dips or selling on rallies if that comes about some other time?
Yeah, because at the current juncture, the way the overall positioning is structured, so I don't think that this news flow will have much of significance. Yes, there will be some initial reaction, and after that, again, you'll witness a rally. But then what we need to consider is that amongst the pharma names, these are some names which are not been doing well. And as a result, if you want to initiate, pharma is now a mixed bag. So there are some long opportunities and short opportunities. So based on what you want to do, you have to plan your approach. So now if you want to initiate a long in pharma, then my bet continues to remain with Aurobindo Pharma and Sun Pharma.
Right, Oro and Sun, those are the bets from the pharma basket. Let's take up a query on shipping companies then. This one is coming in from Alex. He wants to know your thoughts on shipping firms like Garden Reach. This stock was up somewhere around 8% in Wednesday's session. How does it compare with the likes of SCI now?
Yeah, Garden Reach has been a very aggressive mover. It saw a fairly decent run in the last year. Then it slipped into a cool off. But then what we are seeing is that it has managed to find some good floor out here. And we can see that the prices are definitely on the pathway to recovery. So yes, it's a good time to participate in this for an upside towards 500 to 550 within the next few weeks.
Right. Let's shift focus to some of these, banks now. Yagnesh has written in and he wants to know your thoughts on Karur Vysya Bank, PNB and Union Bank, and he wants to know some long and short-term targets. Could you help out with some of these targets so that he can look at trading into some of these counters?
Yeah, so the first was Karur Vysya Bank, and Karur Vysya Bank is definitely showing some positivity out here. And when you take a look at Karur Vysya Bank, the overall movement continues to remain positive. And I would be a buyer at current levels, use dips towards, say, 90 to buy into, because unless and until it gives up the 90 levels, I don't see any kind of decline coming in. But then we got to be careful here. The price has seen a very sharp move, and we could witness some profit booking. So if you're not inclined to buy it at current levels, then the support levels are emerging a little bit way lower in the region of around 75 to 80.
All right, since we are talking about banks, I want to also get in your thoughts on Bandhan Bank. It will sell some of its NPAs to an asset reconstruction companies, but shares had hit a 52-week low earlier this week. So what kind of a strategy should one look at when it comes to Bandhan Bank?
Yeah, we had discussed Bandhan Bank last week itself, and we had the view was the same. We should look at shorting opportunity, and the view even now is not changed because the momentum continues to head lower. And the price structure is also indicating that it could experience some decline. So if you want to participate on the short side, it's a good short opportunity. Considering the market will open up, you may experience a rally. Any rally towards the region of around, say, 200 to 210 could be a good shorting opportunity.
Right, a good shorting opportunity on Bandhan Bank. Before I come to your picks, I want to also get in your thoughts on Aether Industries. It has executed a letter of intent with Saudi Aramco tech company, and it has recently also set up a new plant in Gujarat at an investment of 1,000 crore or thereabouts. The stock was pretty active in Wednesday's session. So how should one look at this one now?
So when you take a look at the overall movement of this particular stock, there is a particular news flow which comes in, and then you see a bump up, and then after that the stock slips into a congestion. So these are some stocks where the investors have to realize that whatever capital they are going to put is going to be locked away for a while. So unless and until you don't have that kind of capital with you, do not look at such stocks, because you cannot expect to generate a return in a short period of time from such names.
Right, that's the call on Aether, but we're running out of time. Raja, so I would come to your picks. What are you recommending for viewers this morning?
Yeah, after a long time, I would look to go in with two long candidates. One is from the defensive play, and one is from the auto sector. So first, let me go with the auto sector. Hero Corp was a short candidate a few weeks ago, but then what has happened is it has hit a nice set of supports. You could look to buy it at current levels with a stop below 2490 for an upside towards 2395. And the second stock is from the FMCG pack. I would look to buy ITC at current levels with a stop below 375 for an upward target of 393 to 398.
Well, buy calls on Hero Moto and ITC. Those are the stock recommendations coming in from Raja. With that, Raja, thanks a lot for taking out time, joining us this morning and addressing all our viewer queries as well. Well, with that, it's a wrap on this edition of Morning Trade. But coming up next is Opening Bell. So don't go anywhere. It's a goodbye from me and the entire team that put the show together.